Hello everyone and welcome back to yet another video. Listen, I have one of the best questions, or should I say comments, right? Question and a comment at the same time, that I think I've ever came across, all right? One of the best ones. And so the person says, listen, what he meant to say, talking about another reader that was talking about the maxed out credit cards. You remember that video? It was an awesome video. He said what he meant to say is, what if I maxed out my credit cards? What if I have no money in my savings or checking account? All right? And at that moment, because you've maxed out all of your lines, because you maxed out all of your credit cards, because you don't have any money in savings or your checking account, then the answer to the question, would velocity banking work, would have to be a resounding no. And that's what he said. That's what they said. The velocity banking can't work if you don't have any money coming in. That's what they said. Is he right? Are they right? I'm asking. Before we answer that question definitively, I want you to hit the like, the share, and the subscribe button. You need to share it right now, because I'm going to tell you something that could save your life. I'm going to tell you something that could boost your retirement, that could create a retirement, that can put money in the checking and savings account. But I need you to open up your mind, all right? And that is this. America is a debt-based economy. What does that mean? That means the banks don't make money unless they lend it. If they're a new bank, they need to lend pronto. Okay? And so where am I going with this? If you have no money on any of your lines of credit, if you don't have any capital on any of your credit cards, if you don't have anything in your checking and savings account, nothing in your retirement account, then this is what you need to do. Get a loan. I said get a loan. Get a loan. Now, if you don't have any income coming in, okay, I wouldn't recommend that. All right? But if you have income coming in and you're faced with all those scenarios, you need to get a loan, and this is what you need to spend it on. A productive expense. Do you remember when I went over the productive expenses? I went over the lifestyle expenses. I went over the destructive expenses. I even went over the protective expenses, which is the insurances. Listen, your number one thing that you need to do with the money that you get loaned, and it doesn't matter if you think that your credit is shot, I've got places that you can get loans from. They're very reasonable, and they can hook you right up so that you could be doing the velocity banking method. Look, but this is your number one goal right here. To double that loan money. To make sure that you are making enough to not only pay the payment, but over that, okay? Spend it on a productive expense. Now, this is what I would spend, let's say the $8,000, or let's just do a nice round number, 10 grand. Let's do the 10 grand like this, okay? 10 grand. What do you think I'm going to advise you to do with the 10 grand of loan money? Loan money! What am I going to advise you to do? That's right. Switch out the interest. turn the $10,000 of the loan interest or the amortized interest or the scheduled payment interest or the whack crazy interest, all right? Switch that out. So put this $10,000 inside of your LOC, right? Your line of credit, whether that's your business line of credit, whether that's your personal line of credit, whether that's your credit card, it doesn't matter. You're going to switch out the $10,000. So you're going to put it all on the lines of credit. You sure are. You're going to put it all on the lines of credit. All right? And you said, well, CJ, what next? Well, because of the scenario that you're in, and you thought that you couldn't do anything, now what you're going to do is you're going to call me. Huh? And then we're going to give you a tool. We're going to show you a tool that you don't have to rack your brain and calculate on how you're going to pay this month, on how you're going to pay that. We have a tool that does that for you. That's all it does. Okay? Because sure, you can take your lines of credit and start paying this loan off. But what we need you to do is we need you to increase your cash flow. All right? Now listen, it does matter what you bring in, and it does matter what you spend. Okay? What goes out and what comes in. Both matter. But what really matters is what's in the middle. Huh? It's like an Oreo cookie. Huh? The outside is great, but the inside is what makes it an Oreo. So we're going to look at it like this, okay? We have the 5K and we have the 3K. We know those are, the 3K is the expense and the 5K is the income. We need the space in between, the 5K minus 3K, that 2K, we need that to be elevated. Why? So that we can pay the lines of credit off faster. Because since we are going through our lines of credit, since we're going through that, we need to ensure that we're paying that off as quick as possible. Does that make sense? All right. Now remember, with your lines of credit, you don't say, okay, 200 here, 200 there. No, you're keeping it in there and you're paying the expenses from your line of credit. Now, preferably, it's going to be the biggest line of credit. Okay, now some of you, man, you're shocked that I said you're going to get a loan, even though you're maxed out on your credit cards, right? You're maxed out on your credit cards. You don't have any money in savings. You don't have any money in checking. But I am not going to look at you and say that you do not and cannot get up. That's not what I'm going to do. I'm not going to say, listen, there's no hope for you. That's not what I'm going to do. I'm not going to say I don't believe in you, because that's a lie. I believe in you. All right? And if you have to pay, right, a line of credit with a line of credit, a loan with a line of credit, did you know that you have to start somewhere? You got to start somewhere. Huh? What did that man do when he lost $900 million? Did he stop getting loans? No, because he knows how this economy works. And folks, that's how it works. I know that some of you don't get it. That's because you weren't taught this in school, but the wealthy were. That's why they can just spend and spend and spend, and it's not their money they're spending. It's someone else's. Because it's all about relationships. That's why I say lines of credit, okay? Because you're building a relationship, a mathematical credit relationship. And that's what it's all about, okay? So it's all about making sure that this loan gets chunked, right? As big as possible. When you get a chunk or a bonus, guess where that's going? That's going straight to the principal, okay? Because the smaller the principal, the smaller the interest. And soon you will have more lines of credit. Soon that space between the incoming expenses will get bigger and bigger, and you'll thank me. And you'll say, my goodness, there really was another way out. All right? Folks, that was a great question. Thank you so much. God bless you, and have a great night.